Hi everyone, welcome to SGX Listing, the rules. Rules for cash companies. But what are cash companies? Cash companies are companies that host only cash and without any real business. Well, this can happen when companies have lost their business and they have no more business, they only hold cash. It can still continue trading if the cash is still in the escrow accounts and updates are provided. What are escrow account? Escrow account are any account that holds with a bank or with a financial company that registered under the Finance Companies Act. They may be delisted if they are unable to find a new business within 12 months. And after the 12 months, there's only a maximum of 6-month extension in looking for a new business. And if you still can't find a new business and you just hold only cash, it has to be delisted. When companies change auditors, they have to inform SGX, as well as the specific reasons for the change that is needed. Not only that, there should be a confirmation of the reasons given by the company from the outgoing auditors. This is to prevent fraud from the company, because that does not allow them to change auditors as they wish. Employee stock options. A lot of companies gave stock options to their, or rather, a lot of companies gave stock options to their employees, and these have to be promptly announced at each grant of the share options to the investing public. Issuers have to provide information such as the grant date, the option exercise price, the number of options granted, and also the option validity period, etc. Well, obviously this is needed to allow shareholders to assess the financial implications of the share and the performance of the issuers. There's also something called an SGX Watchlist. This is only applicable to the primary listed companies on SGX main board, and that exclude investment funds, REITs, business trusts, and global depository receipts. And the purpose of the SGX Watchlist is to improve overall quality of listed companies and promote investor confidence. It is like a black book of SGX where companies that's not doing well will have to fall into this watch list. Well, SGX will place an issuer on a watch list if the issuer records pre-tax losses for 3 consecutive financial years, and the average daily market capitalization of less than 40 million over the last 120 market days. The requirement for companies that is on the watch list requires them to give more frequent updates to SGX as well as the investing public, and that includes quarterly updates. And they have only 2 years to restore their financial health or they risk delisting. Trading of its securities can still carry on. And what criteria and what requirement is it from companies to be removed from the watch list? They must prove that they have become profitable again, and the guideline is a cumulative pre-tax profit of more than 7.5 million over the last 3 consecutive years, but with pre-tax profit of at least 1 million in each of those 3 years. Well, what does that means? It means that altogether it cannot be just 1 year that it hits 7.5 million, but it didn't hit any 1 million in the last 3 years. It has to be consecutive. It has to be a total of 7.5 million and at least 1 million in each of those 3 years. Of course, a cumulative pre-tax profit of more than 10 million for the latest 1 or 2 years will be able to get them removed from the SGX watch list as well. Free float. There must always be more than 10% of the listed shares in public hands at all times. If the free float falls below 10%, this has to be announced, and this may risk suspension in trading as well. And once this happens, you have only 3 months to raise the free float to more than 10%, or you may risk delisting. Well, companies can apply to delist, and for that to happen, a general meeting has to be held for approval. And the approval is from the shareholders itself. it must be approved by more than 75% of the shareholders that's present and voting at the meeting, and the resolution that do not vote against by more than 10% of the shareholders that's present. This means that if there is more than 10% of the shareholders that is against delisting, even though it has approval of more than 75%, it still cannot delist. So these two must happen for the delisting to happen. And the requirement for delisting, there should be a reasonable exit alternative that's offered to the shareholders. It means a compensation to the shareholders. And for this to happen, you must appoint an independent financial advisor to advise this exit offer to the shareholders. Well, that's all on the SGX rules and also the end of topic. Thank you.